Check this out. The countdown is officially underway. The Federal Reserve will soon announce its decision on interest rates and QE3. Ryan Vlastelica is with me this afternoon. Ryan, we've been waiting and waiting, not too much longer.
Right. Our summer of waiting has finally comes to an end. It seems like this whole summer we've been looking for Jackson Hole, the ECB, and now the latest FOMC meeting. We're going to finally get some clarity on QE3 this afternoon in about 30 minutes, like you said. It's by no means a slam dunk. I think only about 65% of economists in a Reuters poll say it's expected. So that's not exactly a huge number. It's still about 2/3 believe it, so 1/3 doesn't. Not a slam dunk. There's still a lot of questions about the size of any QE package.
What they even buy,
what they buy, the time frame, all this stuff. So amid all these questions, we're not seeing stocks do too much. You know, they're trading up a very tiny bit, but for the most part, investors don't want to get ahead of this. You don't fight the Fed. Nobody wants to make that big of a bet until they get a little bit more clarity.
No, but you know what's interesting? You might not want to fight the Fed, but people have been making a bet on banks. We've really seen these bank stocks on a tear, and in fact, the KBW Banking Index has been on fire. When you look at that stock chart, it's pretty impressive last couple of months.
For the past 3 months, pretty much ever since we started getting this growing sense that we would see QE3, investors have been buying in banks and materials and cyclical sectors, all ones that are tied to the pace of economic growth, just in anticipation of really this day. Of course, that makes them extremely vulnerable to disappointment if the Fed doesn't announce anything today. So we are seeing the strongest sectors today, ones that are more defensive, like utilities and so forth. But banks, like you can see,
very little movement right now. Not
movement.
Surprising when you consider the run-up.
Absolutely.
Let's move to the hot spot, Ryan, because the hot stock, and when is it not really, is Apple. The waiting was over for the Apple product. That at least we know all about now.
Big news yesterday. They announced the iPhone 5. It is sort of a mixed bag. Certainly some positive reviews, but also nothing that really stands out. No real wow factor, so to speak, which would be enough on a normal day to disappoint. However, Apple is being very aggressive with their launch plan for this product. In previous times, they've had issues in terms of a component supply or whatever, so there was a big backlog for people who wanted to buy it. They don't see that being a case this year, and that's why you're seeing the stock up more than 1% today. Basically, they have all their components ready, so they're able to sell as much as possible, and analysts are saying that they're going to see double the number of first-week sales that they did for previous products, and of course, previous products had people lining up around the block, so that's a lot.
It's interesting if there's no wow factor that they expect sales to be so strong, but I guess, you know, once you're an Apple devotee, that is it.
You don't fight Apple, I guess, either. Some analysts expect that they could sell as many as 33 million iPhones in this quarter. That's 1 for every 10 people in the United States alone. And in fact, a few days ago, we were talking about how JP Morgan's chief economist said that if they sell 8 million, that could be enough to raise GDP by 0.5%. This is far more than 8 million, and so clearly this is the kind of thing that could have just a major impact on the economy as a whole.
Analysts still love the stock, several of them raising their price targets on it, even though it continues to climb. So another stock to talk about, you know, it's sort of boring, Paul Corporation. Can I say that it's a little boring, it's business?
Well, I personally think that water filtration and so forth is as interesting as it gets. So this is
I didn't know that about you.
It's you know, I don't talk about it a lot. All right, Paul Corp, they make filtration systems and so forth. They had results late last night that were much better than expected. So much so that S&P Capital IQ upgraded the stock to hold. We're seeing a lot of upside there today, almost 8%. It's an S&P 500 component. It's one of the last to report in this quarter, sort of ending the quarter on a good note in terms of the reporting season.
Another stock that is up a decent amount is K12. Tell me about that one.
Well, they're a technology-based education company, and they also had results out earlier, much better than expected, and the stock is up about 7%. It's a smaller company, but it's in the same group as like Apollo and Corinthian colleges and so forth, and those have been seeing questions about enrollment and so forth, so good result here, sort of a good sign for the sector.
Ryan, interesting story for the retail sector. Now, already they're planning ahead of holiday shopping because that's what they do. So the television retailers are saying, you know, everyone's got this 42-inch flat screen. We want people to buy 60 and 90-inch screen TVs, and they want to price them very aggressively, lower than last year. Obviously, they're hoping to get people in and buy them.
Right. Well, TVs this season don't really have any kind of defining new feature like 3D television from a couple of seasons ago. So they need to resort to sort of size just to sort of get these merchandise moving. And of course, if you want to sell a big TV, you should just have Trading at Noon playing on it.
Oh, yeah.
We look great
all
on
the
90
time.
inches.
There you go.
The electronics retail space has been pressured lately, especially Best Buy. They're having a hard time drawing in consumers. A lot of them are just going to Amazon or finding other online deals. So they are resorting to this kind of thing. And we'll see if it works, but certainly that space of retail hasn't been as strong as, say, the apparel space.
All right, Ryan, and the countdown continues. We're not that far away from the Fed.
TikTok.
I know you'll be watching. Great to talk to you. And for more, you can follow us on Twitter at Reuters Insider. Also, check out our Reuters YouTube TV channel at Reuters.com/ReutersTV. I'm Rhonda Schaffler. This is Reuters.